Friends, let us make a beginning with section 143. Thus, we are now to the assessment procedure. And in 143, you got three sections. One is 143.1, intimation. Second one, 143.2, notice, which is required to be issued to take up the case for regular assessment, that is a scrutiny assessment under section 143.3. So under section 143.3, scrutiny assessment will be carried out. So these are the three sections which we need to understand. First, let us look at 143.1. What is 143.1? See, we will file our income tax return. Afterwards, what will happen? Afterwards, what will happen, friends? They will give an acknowledgement. Even that acknowledgement, we call it as a deemed intimation. We call it as a deemed intimation. Under what circumstances? When there is no need for sending an intimation. So for this purpose, first you should know under what circumstances an intimation will be given, and what is the purpose of the whole lot of such intimation is what is most important thing. See, as it is, the assessing officer will be knowing or will be able to exactly test whether whatever the return which we file, that returned income is correct or not. Our claims for exemption and deduction are correct or not. Only when he takes up our case for the regular assessment and examines all the books and documents. So in that context, earlier how the situation used to be, whatever the tax that is due, prima facie give an intimation to the assessee, ask him to pay that particular tax, or whatever the refund that is due for as claimed by the assessee, you immediately send the refund check. If neither the tax is payable nor refund need to be given, there is no need for sending any intimation is what our understanding earlier. But with the new scheme of processing of the returns, which was introduced by the Finance Act 2008, they clearly made it a point that before sending the intimation, you just prima facie make the processing of the return. Because to err is always human. There is a possibility of an error, and it is very easy for anybody who carefully go through that particular return to tell what are all the inconsistent claims for exemptions and deductions. Then to that extent you make adjustment to the returned income and accordingly decide whether amount is payable or refundable. See, sometimes what may happen, let us suppose I filed a loss return. Because of the adjustments, whatever the loss which I claimed and what the loss actually should have been claimed, there could be a difference. Even if there is a reduction in the claim for the loss, even that also need to be intimated, is the point to be well understood. So under three circumstances, SSE need to get an intimation under section 143(1). What are those three circumstances? If any tax is payable, second is if any amount is refundable, third is in case if there is any adjustment to the loss which the SSE is claiming through the return of income. Under these three circumstances, intimation is required to be given to the SSE. See, whenever you are going to process the return for the purpose of issuing an intimation under section 143(1), what is most important? What is most important is what kind of adjustments can be made. What kind of adjustments can be made to the returned income. That is most important. So write down 143(1), section 143(1). Side heading, adjustments to be made in the returned total income. Adjustments to be made in the returned total income under section 143(1). Under section 143(1). Friends, try to understand. These adjustments we are categorizing into three categories. What are those categories of adjustments? Just make a note of that. That is, an incorrect claim, apparent from any information in the return broadly classified into three categories. Broadly classified into three categories. What is category 1? Category 1. An entry in the return which is inconsistent with another entry in such return. See, for this purpose, what could be the possible examples so that you can better appreciate this? Let us suppose tax audit report, which is a part of your income tax return, it is stated personal expenses to the tune of 1,30,000 have been debited to the profit and loss account. So to the tune of 1,30,000, personal expenses are to be disallowed and profit is to be enhanced. Yes, but in the computation statement, they are not making such disallowance. That could be one example. That means one entry is inconsistent with the another entry. Similarly, depreciation schedule we are going to prepare. So depreciation as per income tax, it is stated in that particular schedule as 20,30,000, whereas in the computation statement, which is the part of your income tax return, what is stated is depreciation as per income tax law is 24,30,000. So one entry in the return is inconsistent with the another entry, which just by observation one can found the flaw and accordingly can very well adjust the returned income. Similarly, let us suppose in return of income, it is stated that profits from the head, that is income under the head, profits and gains from business and profession, is 50,75,000, and then in the computation statement they are showing a different figure. That means one entry in the return is consistent with the another entry. That is, if you see the form of return of income, you need to prepare schedules, and then whatever the information you are giving through schedules should be matched with the computation statement. In computation statement, one amount is there as income under the head, profits and gains from business and profession, and in the schedule there is another amount. So these are all the inconsistencies. That is, one entry in the return is inconsistent with the another entry or the item in the return, then definitely this is something which you have to correct before you send the intimation under section 143(1). Then what is the second kind of inconsistencies are incorrect claims. Write down second RB as an entry in respect of which information is required to be furnished to substantiate such entry, has not been furnished. Like, listen the example. See, all of us have studied the capital gains topic. Under the head capital gains, there are exemptions. That is 5454F. like I make sale of a residential property, again I am going to purchase or construct another residential property. In order to claim the exemption under section 54, what is the prerequisite? Whatever the capital gains you want to get the exemption, to that extent you need to make the investment in another residential property, either by way of purchase of it or by way of construction of it. Let us suppose before filing the return or before the end of the financial year, I am not in a position to make such investment, but still there is an intention for me to make the investment and claim the exemption. The law says you can do so, that is, happy well you put the money which you want to invest in capital gains deposit scheme and show a proof that you have deposited that particular money and give the details of the same along with the return of income. Let us suppose somebody simply is writing in the income tax return that I deposited the money under the capital gains deposit scheme without sufficient proof. Definitely to that extent a disallowance can be made before intimation is sent to the, the SSC. See, subsequently in case if he is going to show that this is the claim I made and this is the proof, it can be well rectified. But as it is, when you are going to send an intimation, for the claims of exemption in respect of which sufficient documentary proof need to be given, if it is not given, very well adjustments can be made to the returned income. Similarly friends, under section 43B of the income tax law, if there are some statutory dues, they are to be paid on or before the due date under section 139(1). And in case if proof of payment of those statutory dues are not properly given through the return of income, then also one can make adjustment to the returned income and accordingly only can send the intimation. Then the third category, what is the third category? Write down. An entry in the return, an entry in the return in respect of a deduction, in respect of a deduction where such a deduction exceeds, specified statutory limit, which may have been expressed, as a monetary amount, or a percentage or a ratio or fraction, Yes friends, what could be the possible examples here? See, under the head income from house property, there is a deduction given for repairs and collection. The deduction, what it says, irrespective of the amount that you spent towards the repairs, a standard deduction to the tune of 30% of the net annual value will be allowed. Then in your return, instead of claiming the 30% of the net annual value, let us suppose you are stating there that this is the actual amount of the repairs that I incurred, and accordingly I am claiming for the deduction in respect of such a repairs. Then to that extent adjustment is warranted in the intimation. Similarly, under section 80C, all of you know that for the investments made by the SSE which are specified in 80C, there is a maximum limit. Earlier it used to be 1 lakh, now with infrastructure bonds and all, now you can get 120. So let us suppose an SSE made the investment in the prescribed investment to the tune of 2 lakhs and wanted to claim entire 2 lakhs through the return of income. So in case if he is doing like that, any person who goes carefully through that particular return can say that to the extent the amount exceeds the statutory limit, it will not be given. So under that situation also one can make an adjustment to the returned income and accordingly should make the adjustment to the amount of tax payable or refundable, and accordingly should send the intimation is the point. So friends, the whole lot of discussion by now should bring a point very clearly in your mind, that is, it's not a simple exercise today, unlike the earlier situation where the assessing officer need to do only one thing, that is, in case through return if some amount is refundable, he used to refund it, if some amount is payable, he used to send a demand notice. But today your 143(1) intimation requires some processing, and certain defects without looking at the books of accounts and the documents also we can find out, which are broadly classified into 3 categories. One is one entry is inconsistent with the another entry. Second is SSE made a claim for exemption or deduction in respect of which proof is not there. Similarly, certain deductions and exemptions are coming with some statutory limit, whereas claim for that particular exemption or deduction is made above the statutory limit. These are the things which can be well corrected through the intimation. That is one important aspect. Then general understanding, friends, under section 143(1), what assessing officer can do. First thing we are clear is he can correct any arithmetical errors in the return. Yes, sometimes additions, deductions, carry forwards, there could be possible errors. So all arithmetical errors can be corrected by the assessing officer. Then in case if there is an claim and sufficient documentary evidence is not there, then such incorrect claims can be corrected. Similarly, incorrectly if any reliefs are being claimed, those things can be corrected. Then correct the prepaid taxes claimed by the SSE, that is a TDS credit, advance tax. If there are any errors with respect to such kind of claims for the TDS where information is not properly given in the return, to that extent corrections can be made by the assessing officer. So the noteworthy points with respect to the intimation under section 143(1), please make note of it. That is point number 1, side heading, under the following 3 circumstances oblique purposes, oblique for the purposes, intimation under section 143(1) shall be sent to the SSC, shall be sent to the SSC. A, where tax oblique interest, where tax oblique interest is found payable, is found payable. Next, number 2, where any tax oblique interest is found refundable, is found refundable. Third, where adjustments carried out to the returned income, to the returned income resulted in increase oblique reduction, increase oblique reduction of loss declared by the SSC, declared by the SSC So basically I am looking at under these 3 circumstances, and for these 3 purposes only intimation will be sent by the assessing officer to the SSC is the point. So we are very clear with 2 aspects. What can be corrected and under what circumstances the intimation will go to the SSC. Because friends, a general point also, when I file my return, 90% situation, I'll always try to see that I make a correct computation and I only pay the tax which is required. I don't feel like keeping some tax remained unpaid, or I don't to a greater extent feel like having some refund. Because general psychology is, if we say amount is refundable, they will call for so much of the information and I may be in trouble. This is a general psychology of the SSCs. Because the moment some letter comes from the income tax department, because they are not well versed with the tax laws, there will be some panic feeling. So usually it happens like that. So that is the reason why law is also kind enough now to say that Only if there is some tax payable or refundable, or what the loss he claimed got reduced by you are making all the adjustments and an intimation. Otherwise intimation is not required. Whatever the return that he filed wherein you gave the acknowledgement, that shall be deemed to be an intimation. Then friends, write down the next point. If there is no tax or interests payable or refundable, and no adjustment is made for the loss stated in the return, then intimation should not be sent. Under section 143(1), and acknowledgement of filing a return is deemed as intimation. Then few issues. What could be the possible issues? Let us suppose the assessing officer primarily processed the return in the manner in which we discussed now and sent an intimation under section 143(1). Subsequently, the case can be taken up for regular assessment by issuing a notice under section 143(2). The case can be taken up for regular assessment? Yes, very much he can do it. See, can the SSC says, sir, I received intimation, thank you. Because generally SCs are of the feeling that the moment they get the intimation, that is a finality. Probably in 90% cases it may be finality. But there is a chance that your case may be taken up for scrutiny, whereby a notice will be coming to you under section 143(2), where they want to take up your case for regular assessment under 143(3). So you can't say that since I am already given this particular intimation under section 143(1), they can't take up my case by issuing notice under section 143(2) under section 143(3). So write down that as even after intimation under section 143(1) is issued, intimation under section 143(1) is issued, case can be taken up for a regular assessment. Case can be taken up for regular assessment under section 143(3). Under section 143(3), by issuing a notice under section 143(2). Next aspect of the discussion is intimation under section 143(1). What we say? Like, before giving the demand notice asking the SC to pay the tax, or giving the refund check, you have to intimate the fact whether he required to pay the tax or amount is refundable to him. This is the whole lot of purpose of the intimation. Now, can an assessee feel that intimation is an assessment order? No. Intimation is not an assessment order. Intimation is not an assessment order, give rise to so many other issues also. First write down. Intimation under section 143(1), intimation under section 143(1) is not an assessment order. See, we studied appeals and revisions. What can be appealed before the CIT appeals is only against the order passed by the assessing officer. Similarly, we also studied section 264, revisionary powers of Commissioner of Income Tax. Friends, please do remember, even Commissioner can revise through section 264 what? That is only an assessment order. He can't revise an intimation. Similarly, under section 263, what is it? Revisionary power of Commissioner of Income Tax, where the order passed is erroneous and prejudicial to the interest of the revenue. There also what can be revised is only an order. So intimation not being an order cannot be revised. Of course, friends, section 154 we are going to study, which talks about rectification of mistake. So if there is some error in the intimation, one can take the help of section 154 and can request the assessing officer to make rectification of mistake under section 154 of whatever the mistake that is there in the intimation is the point. So these are the important aspects. And one more important thing is revised return. After receiving the intimation, can I file my revised return? Very well, you can do, provided there is a time that is available which is prescribed under section 139(5) is the point. So these aspects point wise you just make note of. Number one, that is, or if you are already with some numbers, continue with those numbers. CIT appeals can only revise an assessment order. Thus, CIT appeals can revise, not revise. CIT appeals can take the appeal against a assessment order. CIT appeals can take an appeal against a assessment order. Thus, SSC cannot make any appeal. Thus, SSC cannot make any appeal against intimation. Next, through section 263/264, through section 263/264, what can be revised is only an assessment order, an assessment order. Thus, intimation cannot be revised. Then, rectification for a mistake in the intimation. Next point, rectification for a mistake in the intimation can be done under section 154, because the section clearly states that intimation can also be, mistake apparent in the intimation can also be rectified is a point. Next point, make note. A revised return under section 139(5), a revised return under section 139(5) can be made even after intimation is received. Because basically what your 139(5) says, friends, a return can be revised before the assessment gets completed or within 1 year from the end of the relevant assessment year, whichever is earlier. So that made us to say that even after receiving of the intimation under section 143(1), a return which you filed, you can file a revised return under section 139(5) is the point.